Welcome to Portfolio Playbook. I'm your host, Damanick Dantes, portfolio manager and founder at Dantes Outlook. And here's what crossed my desk this week: a major US Japan trade deal, strong Q2 earnings, meme stocks are back, and central banks are cautious. And we're pulling insight also from Deutsche Bank, Vanguard, and DeepMacro, and of course, our own research team. Let's jump in. First, we had trade. Japan and the US agreed on a 15% flat tariff for autos and key exports. They're dodging a 30% hit and committing $550 billion to the US supply chain. That has helped ease one major global tail risk, but we're not out of the woods yet. Eyes are now on the EU. Their August 1 deadline is fast approaching, and a deal would actually keep the rally alive, while a breakdown could bring volatility right back. Second, we had earnings. About 30% of the S&P 500 names have reported, and over 80% have beaten estimates. The EPS growth got bumped up to 6 to 7%, but that's still the slowest pace in over a year. Financials are strong where we're overweight. Tariff-sensitive names like GM, not so much. Next, meme stock media. Open Door, Krispy Kreme, GoPro, all popular names. They're up about 25% to 100% in a day. It's 2021 vibes again. We're not chasing that, but it tells us something. Retail risk appetite is alive and well. Fourth, central banks. So the ECB held rates, but they sounded a bit hawkish. Lagarde didn't rule out a hike. And back here in the US, jobless claims, they dropped again. PMIs came in hot, and the market is now pricing fewer than two cuts for the rest of the year. And now from our team, Victor Zhao is one of our portfolio strategists, and he shared great insights on enhanced active strategies. Think of it as smart active. We're targeting alpha with just a 0.5% to 2% tracking error relative to the benchmark. We've already reduced our portfolio concentration with our long-standing US equity overweight being trimmed down and narrowed. That has lowered our tracking error while we're still staying flexible, while still staying true to our models. Elena Zhang is our Asia correspondent, and she has pointed to a rise in IPO activity in Hong Kong. That's thanks to Beijing's support and concern over US delistings. That's pushed more Chinese companies offshore, and it actually signals why our global diversification is more critical than ever. Shifting to Vanguard's research, they've cut their long-term U.S. equity return forecast to 3.3 to 5.3%, while bonds are actually now expected to return 4 to 5%. Their takeaway is that the equity risk premium is gone. Diversify and look abroad. Deep macro models show broad global growth, especially in emerging markets. Brazil and India, in particular, are in expansion regimes with falling risk and rising momentum. So here's what we're doing. Just to recap our positioning, we've trimmed our long-standing US large cap overweight to diversify into international markets. We've added some exposure in EM and European equities, and we're also adding to our watch list, no signals yet, but just on the watch list, attractive areas like international small caps and emerging market debt. We're staying overweight intermediate term treasuries. That's been a sweet spot for us, and also sovereign bonds internationally. We're not favoring high yield credit right now. Spreads are low. The market's a bit complacent there. We have trimmed some of our exposure to gold because of the risk on rally, but we're also watching other commodities with declining correlations to equities from peak levels. Think about copper, platinum, and silver. Those commodities have shown impressive breakouts, but they're not stretched relative to their long-term average levels. And overall, we're just taking advantage of a weakening US dollar. All of this is backed by our market intelligence system, where we track price trends, price dispersion, and price momentum, not opinions. Markets are messy, but your strategy doesn't have to be. At Dante's Outlook, we're helping clients and fellow advisors build portfolios that adapt without overreacting. If you're looking for tailored models, full service management, or a way to scale your advisory business without the portfolio headaches, feel free to visit us at dantesoutlook.com, or you can reach out to me directly. Until next time, have a great weekend.